important to remember the context of the slight weakness we've had. We had an incredible run, perhaps in the short term a little overbought. Very strong trend, but when you kind of look at it, we haven't really broke that uptrend. We're just sort of haven't even necessarily filled the gap that was created last week, midweek. So the trend still looks strong. We're constantly looking for signs of the trend to break down, but right now it's not necessarily giving us any. Perhaps a period of consolidation is the highest probability right now, but from the studies we've done, when you look at historical price action, even when you have these strong run-ups, perhaps in the short or intermediate term, it's time for a little bit of a pause or a correction in time. But these generally resolve themselves to the upside in the long term.
So you would be using these pullbacks then that you're referring to, that we're seeing in the market right now, to actually add to positions?
Yes, that's absolutely right. When you look at the overall trend, as I mentioned, we kind of look at the market from a three-prong approach. We like to look at the technical price action, which, as I just mentioned, has been incredibly strong. The fundamentals were on the heels of the fourth quarter earnings, which had a second consecutive positive 12-month earnings per share growth rate. That's the first time since the first quarter of 2015. So fundamentals are improving. One of the risks is some of the sentiment. We're starting to see a little bit of bullish sentiment come in. So we're not really necessarily in the early innings of an economic recovery or a bull market. We're obviously a very mature bull market at this point, maybe in the seventh or eighth inning, but you want to start to look for more and more risks. But right here, right now, it's not necessarily anything flashing warning sign that you're at an ultimate top right here, right now. I think there's still some reasons to be long this market.